Oliver, I wonder if what we're seeing in this period changes the kind of calculus around how investors look at technology investment. For a while, it seemed like some companies like Amazon kind of get a pass on investing in technology because investors believed that it would lead to real growth, but some other companies might get dinged when they were investing in it. But now it seems that's critical for everybody.
Yeah, what we're really seeing here is the integration of bricks and clicks. So Target really hit the bullseye on their numbers. What stood out really was 195% e-commerce growth, and using stores as hubs or fulfillment centers, particularly drive up, curbside pickup, and reinventing the purpose of the store to integrate the whole shopping journey. So what's happening is America really values convenience, and Target's done a great job being America's easiest place to shop and thinking about physical mixed with digital and instant gratification. Same day fulfillment's a big deal, and customers want it all. They want physical, they want digital, they want groceries and hard lines, how they want it. We're also seeing this at-home revolution with home electronics doing really well too. So that these are all key themes, and as retail continues to evolve, this whole fulfillment and stores plus digital will continue to be a huge theme.
Mm-hmm. Yeah, Michael, I want to continue pushing on this technology investment angle and how investors should think about it. I mean, the e-commerce acceleration that we saw in Walmart, in Target, Home Depot, Lowe's, we just had Ace Hardware. I mean, it seems like perhaps these companies are establishing a track record of actually being able to get results out of these investments that they're making, despite whatever margin cost there might be. Might investors, you think, or should investors give them more of a multiple because of that?
Well, yeah, and I think really the key is that e-commerce is no longer a bad word. If you think back a couple of years ago, if you mentioned e-commerce, the idea was to short all retail. It took some of these retailers a while to understand the investments in technology that needed to be made, but they've done it. To Oliver's point, using the stores as assets instead of liabilities. Again, if you go back maybe 5 years ago, the idea was if you had a store, you were in trouble. These companies, through their technology investments, have really proven that's not the case. So I'm not sure what it means specifically for multiples, except that I do believe that investing in technology to drive your sales and your earnings is certainly the right thing to do for these companies.
Hey, Oliver, it was interesting to hear, Oliver, it was interesting to hear McMillan's comments and then Cornell's comments about the mix of tailwind between stimulus dollars and simple share shift away from travel and leisure into retail. I wondered, do we take that to mean that Target believes further stimulus packages are less direly needed, or what'd you make of that?
Yeah, it's something we're really watching because the stimulus, in our view, has had a strong impact of 3 to 5% or more. As Target speaks about it, part of their weakness was related to back to school. And back to school is going to be a longer season with a lot of uncertainty. So the back to school season, and as we watch holiday, was an area of cautious optimism for Target. Walmart was a little more clear in terms of the stimulus and not having the stimulus impacting the performance lately. So those are things that we're watching. And stimulus interplays with unemployment as well as consumer confidence. Those are all factors that will really weigh on the consumer. Target's been our top pick. It's a top idea as well as Walmart. We think they're both great places to be in this uncertain environment. We're seeing a bifurcation. On the other hand, Kohl's had very tough results, being down 20%. So what you're seeing is a transformation in retail, with the malls and apparel retailers having a lot more problems, but broad lines, home, grocery being key stocks to own. But that's something we're watching, Carl.